Welcome to the Cash Flow Project Podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cash Flow Project. I'm your host, Duke Ong with Tri-City Equity Group. Today we have Vince Gethings on the show. Vince is one of the managing partners of Tri-City Equity Group. Vince, welcome to the show.
Hey Duke, I'm super excited today to share some of my story of kind of where I came from, how I got to where we are now, at Tri-City, forming this company, and some of the background of that led me here. So pretty excited to get into it.
All right, so how did you get started in your journey to earn passive cash flow?
So passive cash flow started I was at Travis Air Force Base in California. It's Bay Area, California, East Bay. So about 30 minutes north of Berkeley is the area where I started getting really heavy into investing. However, at that time, I was really heavy into stock investing. And that's kind of what I was into at the time. That's what was sexy. That's what all the books I read. I was very much into kind of Warren Buffett, value investing, and everything like that. And then at the same time, I was doing what's called the VA house hack, where any veterans can use their VA home loan benefit to buy a house, move into it, and do a kind of like a live-in flip. Like you flip the house, you fix it up while you live there, and then when you sell it, it's no capital gains tax or anything like that. So that was kind of two things I was doing, and they kind of culminated in 2016, where I was selling that house. Had a bunch of capital gains, about $130,000 is what we ended up making off that house, completely tax-free. And then at the same time, I was getting ready to get out of Wall Street as well. A lot of my brokerage accounts and everything like that, I was kind of not happy with what I was seeing, and I was ready to just move on and look for something else. At the time, I didn't really know what I was looking for, but I know I wanted to liquidate my brokerage accounts and my IRAs and everything like that. So up until then, I did everything on, I found Bigger Pockets. So again, 2016, I found Bigger Pockets, Brandon Turner's book, and that really sparked the interest, of course, with Rich Dad Poor Dad. Is that same year I read that, and that was when I knew something needed to change. And Robert Kiyosaki gets that bug in your ear. So 2016, read Rich Dad Poor Dad, got on Bigger Pockets, Brandon Turner's books, and I made the decision I'm going to liquidate everything. So we sold the house, liquidated all my brokerage accounts because I was just so kind of frustrated what was going on in the stock market and some of the stuff I was seeing. And then I ended up buying 19 small multifamily properties in Michigan, so in 18 months. So 19 properties or 19 doors in 18 months using Bigger Pockets, a lot of the free forums there, a lot of the free content there, and also Brandon Turner's books and the other books you can get on Bigger Pockets. So at the time, I thought I was, a rock star. I was like, man, this is awesome. I'm doing great. And that's how I got started building my first portfolio, and that was the company Aeronautics. So 2016 and 2018 is when I really stood up that company, Aeronautics LLC. So
how did you decide on real estate versus stocks?
So like I mentioned earlier, I was in stocks first. A lot of military members we're driven to stocks a lot easier because we move around a lot. So real estate is a little bit harder, just because if you're trying to buy locally, and you get orders every 3 to 4 years, it kind of gets frustrating and hard to build up put your roots down and build up a portfolio in one area. So a lot of us just use stocks because it's something you can do while you're deployed. Doesn't matter where you are. You can log into your Vanguard account or whatever your brokerage account is, and make transactions, make your trades. So that's what I was doing first. And then I was just getting so frustrated, and I said this before, and I didn't really explain why, is the lack of control that I started noticing that people really have when they're investing in Wall Street. Even if you can do a mutual fund where you really have no control at all. You just give it to a fund manager and you get mediocre results, and you're just happy with that, I guess. Or you just don't know any better and you think that that's what you're supposed to do. Give your money to a fund manager, and maybe you'll be 4, 5, 6% after their fees, and you're good. So that was never really an option for me. So I did mainly ETFs and individual companies. ETFs were pretty good. I feel like if you're going to do stocks, ETFs, I think, are the way to go. Individual companies where I got really frustrated was I would do a lot of research on, and the one instance was I did a lot of research, like 6 months of research on this one company in the green energy sector. And I put some money on it, and it wasn't a whole lot, a few grand. And I ended up lost it all because the CEO and the CFO were submitting false documents to the SEC, and the once that got released, the stock plummeted, and everybody lost their money, and that really struck a chord with me. Again, this happened in 2016, and I was like, man, all that research I did down the drain. Like these companies, like you think you have control because you're picking the company and you can, decide when to sell and when to buy and all that, but you really have no control. You're not on the board of these companies. You're not the CEO. You're not the CFO. You're not the COO. You have no control over really anything. And that's what drove me to real estate. With real estate, you have so much more control. You can choose who your property managers are. You can choose who you have contracts with as far as vendors or contractors, GCs. You can choose who your residents are as long as you're, following the law, still fair housing laws, but you can choose not to put, felons in your units if you choose not to, right? If you don't want a certain, breed of animal or animals at all, like that's your choice. Right? So you have control over a lot of the aspect. You have control of when you buy it. A lot of times when you sell, you can do the creative financing and the creative exit strategies. And that's what really drove me to multifamily was the control of that asset that you have compared to, paper assets like securities on Wall Street.
Makes sense. So what is your why for building passive cash flow?
All right. What is my why? So I could sit here for the next hour and get all, teary-eyed and everything going into my why. So I'm not going to go too deep. But the biggest points on what my why or what my drivers are is I did not have a great childhood, I guess is the easiest way to put it. So with that said, now that I'm a father myself, I have 3 little kids. I want to make sure that my kids, my children, never have to have those feelings and those thoughts that I did when I was growing up. So many things, so many emotions that are getting drummed up right now. But one of my biggest drivers is just making sure that I can provide a life for my kids that I couldn't even dreamt of. And that's not, that's not a big ask or a big request. So that's one of them. The other one is, for a lot of my life, especially my adult life, is I've kind of been, somewhat of an underdog. Obviously, a lot of, self-doubt from the way I grew up, a lot of insecurities. So because I've had that, kind of that underdog mentality, I felt like I've also been, held back to some degree in my current career for various reasons. So now I really, through entrepreneurship, really gives you the ability to spread your wings, in this capitalist, economy that we have is, you can make whatever you want out of it. So you can really strive to reach your true potential, through entrepreneurship. Nobody's going to stop you. If you want to do something, if you can do it, there's not going to be a whole lot of people standing in your way if you have the desire to make something happen. So really, it's just I really want to see what my true potential is going to this next chapter of my life, full-blown entrepreneurship. And the last one is charity. So I have a few charities that I really hold dear to my heart, and I want to be able to make a difference and give to them. And it's really hard to give to charities when you're poor. When you're wealthy, it's you have the means to help a lot of people. So that is one of the other reasons, which is my why.
Which charities?
So for me, it's the Ronald McDonald House. I really like, or any kind of those Fisher houses where if you have sick family members or sick children for Ronald McDonald, where they'll put the families up for free for however long they need. The family doesn't have to worry about any kind of shelter or anything like that. Sometimes they'll offer food and stuff like that as well. But they get zero bill at the end of it. So that's one of them. And the other one's the St. Jude Hospital and the Shiners Hospital as well. So the children's hospitals. So they kind of go hand in hand. So a children's hospital and then the Fisher houses or the Ronald McDonald House are my big ones.
Got it. All right, so let's shift gears. So tell me about the most recent deal that you invested in, and how did you find it and structure it?
Yeah, so the most recent deal was a 48 unit in El Paso, Texas. We found it through broker relationships that we've been working on for the last few months. I think it was maybe our fourth property we offered on with this broker. So found it. It was on MLS at the point that we saw it wasn't this off market deal. So it was on market. We structured it as our first syndication. We did a typical 80-20 split on it. The sponsors got 20% of the equity in that property, and the limited partners got 80%. So they got the lion's share of that deal, and the sponsors, the general partnerships, get 20% for their hard work, their sweat equity. They're getting 20% of that deal. And then other structures we did that was kind of unique was we saw there was a need for two different offerings on the limited partners. We had some limited partners that there's a big gap in the risk profile of the investors or what they kind of wanted or what they were comfortable with. So we ended up, being entrepreneurs, we ended up solving their problem by just splitting up two classes of shares. So we had an A1 and an A2 share where, one product was less risky than the other one, and that everybody was happy with that offering. And we solved the problem. We create a vehicle that matched their risk profile and their target returns. And that's what you do as sponsors, what you do as entrepreneurs is you listen to your investors, you listen to your customers, and you solve their problems. And that's what we did with this first syndication. So it was a lot of fun, tons of learning. Even though I've done 10 deals before this, syndication is not as easy as people say it is, and I have no problem in saying that. And we had, even after during our debrief, I don't know how many pages of notes we had of kind of lessons learned and things we can do better next time. So I'm really excited for the next one. We keep refining our systems, refining our processes, and just keep moving forward.
How's that deal doing currently?
It is doing phenomenal. We're recording this on May 20th, 2020. And if you're alive at this time, what's going on in the world with coronavirus and pandemic, and we're absolutely crushing it in El Paso right now. And we're only 1 month and 5 days into acquisition, and the property manager who's on the ground there is absolutely killing it, and he's leasing up units before the paint even dries on the property. So he's doing an absolute phenomenal job, and we're getting right into our phase one big CapEx projects there of really sprucing up the outside, landscaping, exterior repairs, and improving the lighting. We're getting a big monument sign made to really show the current residents there and the neighborhood, hey, this place is turning around. This is some place that you want to be. You want to stay here with us, because we're going to make this place better, a better community for you to live. And that's a lot of what our business plan is changing not just the profit side of increasing NOI for the property, but also making a property safe, clean, habitable, and a place that people want to be. That really community atmosphere that I think a lot of places lack, especially a lot of mom and pop operators that just don't have the sophistication or have the knowledge of what the benefit of those things are, the second, third order effects. So
And what's your role in that deal?
I am the sponsor. So I'm one of the main sponsors on that deal. So I do a lot of the underwriting, a lot of the due diligence, most of the negotiating back and forth is what I did. And now in this new venture, I'm the COO. So I do a lot of the daily operating tasks. So a lot of the managing the manager, managing the various subcontractors we have on that property.
All right. So what is one obstacle that you faced in your journey as an investor, and how did you overcome that?
Got it. So this take us back to 2018. So right around the time I thought I was awesome, because I had 20 units under my belt, and I built the company in 18 months, 20 units, right around $1 million portfolio. I completely hit, a ceiling at 80 miles an hour, and I couldn't figure out why. It was one of those things where I know I was doing something wrong, and I couldn't grow anymore, and I didn't know why. It's like, it is really frustrating. Like, something's not right, but you're not smart enough, you're not experienced enough to open that, that window and figure out what you're doing wrong. So it's one of those things, like, you don't know what you don't know. But at least I was aware enough to know that I was missing something. So I hit a ceiling in my business plan, and not just my business plan, but the current systems I had, the time I had, the energy I had, the capital I had was all illiquid. It was all locked up in these properties, and it just wasn't, the business plan just wasn't working fast enough. The burst strategy and all that, the refinancing and stuff like that wasn't coming fast enough. So I knew something was wrong. The best thing I did was I started reading more. Go back to education is what I did. I burned through 20 books on multifamily, read a ton of great content, and I might even mention some of those a bit later. But then I still wanted something more than just the books you can get. So I went out and I got a mentor. I think the best thing you should do is just get a mentor and have a mentor in the space that you're trying to, or that you're in, or that you're trying to be in, and just like maybe a couple rungs up the ladder from you. You want them to be more successful than you, but in the same industry as you and active in that industry. You don't want a person that used to be successful 20 years ago, because there's a good chance that whatever their business model was doesn't work anymore. So you want somebody that's operating right now in the current environment to be your mentor, and that's what I did. And to get the result of that I got that that mentor and joined that program in fall of 2018, and we were under contract on that 52 unit property, our first big multifamily property, in I think February of 2019. So put that scale, that timeline together. 2018, I just started the program, learned all the things that I was doing wrong and all the things where I can grow and all my weaknesses, and figure out how to strengthen them, or in my case, get partners to compensate for the things I was lacking, my weaknesses. And we were able to close 52 unit property on the very next deal. So I went from small multifamily, duplexes and quads, to a 52 unit portfolio on the very next sale. So absolutely, they are worth it. But again, the last thing I'll say with mentors is you got to put in the work. They're not going to walk through that door for you. They might have the experience, and they might have the systems. That a lot of it is they're going to be showing you their systems and their processes, and that's a lot of what you're doing. And they're going to give you a lot of the, here's a lot of the potholes that I fell in, so you can kind of walk around them and not fall in the same mistakes I did. And that's going to be great, but you still have to do the work. Don't think you're going to sign up for a program and they're going to, start partnering with you on deals and writing you checks for $1 million so you can go buy properties or solve all your problems for you. You still need to put in the work. That is 100% up to you.
That makes sense. So what are some common myths in real estate?
Common myths in real estate. That you have to deal with the 3 T's, right? The tenants, the toilets, and the termites. I think that's a big one. I think that's what a lot of people end up doing, and that's what I was seeing with the first circles I was with, that were circles of people that was investors that were focusing on building like single family portfolios and small multifamily portfolios is that they weren't building, passive income. They're building themselves a job, for various reasons. One, they thought that, commercial property was something that, that was out of their league. They could never do it. That was something with, people with MBAs on, in suits do, not, the working class, family could get into that market. So a lot of it was like that. So they're just building, they were buying like, the single family house down the street, and they were doing all the work. They were, tenant calls them, middle of the night, they're going to hop in the car and go over this. They're building themselves another job, instead of freedom, which is what we get into this business for, is that financial freedom. So the myth is that you have to do that, and you don't. And this isn't a high barrier to entry where, you have to, it's just never an option for you to get into these types of vehicles. For us, for me, I partnered up. So that was how I quickly got out of that. And I just showed you how quickly I got onto it. Between October and January is all it took me to get out of those limiting beliefs and scale up to a real company that can afford real systems and real high quality people and have real economies of scale and efficiencies in our processes. So partnering up, was one of the best things for us. So the belief, I guess, is that you have to do everything yourself. And you have to buy, one house at a time. It works for some people, but it wasn't. I saw severe limitations in that model, and wasn't for me.
Yeah, definitely. Multifamily is a team sport. Mm-hmm. So what advice would you give your 20-year-old self? What were you doing, and where were you at the time?
Yeah, so 20 years old, I was in the Air Force, joined 2 years. So I was joined at 18. So I joined the military really young. And at 20 years old, I was in Barksdale Air Force Base, Louisiana, which is Shreveport, Louisiana. Not making good decisions at all, as most 20-year-old people do. And pretty much everywhere in my life was a mess. But I was a hard worker, so I had that going for me. But I think if the one thing I would go back, if I could, to that time, and it wasn't really the finances, because I caught on finances really quick. I was always the guy around who had, pretty good amount in savings and was really good at budgeting, and knew how to, budget, which is pretty big to say for 20 years old, as, monthly budget or how to write checks and stuff like that. So that was never really the issue. It was the people I was hanging out with. So, the saying that you're the average of the 5 people that you hang around with is absolutely true. You will adopt all of their bad habits. You will adopt all of their limiting beliefs, all of their perceptions of what is achievable, or what, okay is, or what normal is. You will adopt all of that stuff, and you'll become comfortable, and it'll stagnate you, and you will not grow, for so many reasons. So if I were to go back into that time, I would say lose those people I'm hanging out with, get into books sooner, and focus on yourself, maturing yourself, and working on yourself, because those people that I was hanging out with were not the best.
So for the people listening to this, struggling to get started, what advice would you give?
Everything I just said. No, so join a mastermind. So that would be, anything between a meetup group, or, we're doing a lot of stuff virtual now. So a virtual meetup group, RIAs are okay. But yeah, so join a mastermind with people that are like-minded, that are doing the things that you want to do. Ideally, you want to be in a room where you're like the dumbest person in the room, I guess is the brashest way I can say that, is if you're the smartest person in the room, you're in the wrong room. So you want to find a mastermind with like-minded people with similar goals. That way you can kind of feed off your energy off each other is one thing. You'll have accountability from these people. Now, if you say you're going to do something, and you're hanging out with high caliber, high quality people that are goal driven and action driven, they're going to hold you accountable. Like, they're going to say, hey, I thought you said you were going to do this. Why are you sitting on your ass, watching Netflix this weekend? You need to be going out there and making it happen. Join a mastermind is the first one. Get around those like-minded people. The next one is partner up. Don't think that you have to do any part of this yourself. The best thing that I did was partner up. I've been in meetups and masterminds and stuff like that where that light bulb clicks on for somebody after 10, 20 years of investing all by themselves, that they realize that, holy crap, if I partnered up beginning, I'd be 10 times bigger than I am now. And not just portfolio size, but like their financial freedom, they would have reached 10 times sooner, whatever that number was for them, if they would have partnered up. Because you can leverage so much more than just money in this business. You can leverage time. We can start trading off tasks with other people. You can leverage experience. If you partner up with somebody that's more experienced than you can leverage that. And now you have access to, people and things that you would never have access to. Like you can leverage somebody that's more experienced, and now a broker will talk to you because you're partnered up with somebody that has done deals. If you partner up with somebody that's a high net worth individual, now you're going to be open up to more loan options than you would have ever been given to a bank, because you probably wouldn't have qualified. So it's not just leveraging just the money side of it. There's so much more things that come with when you start partnering up and leveraging like-minded people that have similar core values than you, similar goals, similar timelines. You really start, it's exponential growth curve that starts happening very quickly.
And what is the best book that you recommend other than Rich Dad Poor Dad?
Yep. So I have a bunch, and since this is half my podcast, I get to give you more than one. So the best books I have that have really helped me is the 10X Rule by Grant Cardone. That one really kicks you in the butt. Give you a story there. So a lot of it's just going to be people have these limiting beliefs on what they think they can achieve. And this book just really kind of blows it up, that whole mindset. Set goals 10 times higher than you think you can achieve, because that's where growth happens. I'll get to that in a second here. I'll come back to that. So yeah, the 10X Rule, the One Thing by Gary Keller goes excellent. Those two books are very compatible. The 7 Habits of Highly Effective People by Stephen Covey is a foundational book for me, just being personally productive with your time and everywhere in your life as far as just personal management. How to Win Friends and Influence People by Dale Carnegie is the most gifted book I've ever had. I give that book out more than anything else. I read it once a year, or at least go back through and read my highlights once a year. Have it on Audible as well. I think that should be required reading for anybody that's 16 years old or to graduate high school. They need to be required to read that book because it's that important and that foundational to just maturing into an adult and being a little bit more empathetic than you normally would. Think and Grow Rich is absolutely foundational to where I am now. That was one of the first books I've read to start this journey of personal growth. The 4-Hour Workweek by Tim Ferriss. That was another book of like, hey, there's another route here. That was the first one that kind of planted that seed, that moment of inception of, hey, I don't have to do this 9 to 5 for 40 years and retire broke with this pension. There's other ways and there's other things I can do right now. So the 4-Hour Workweek, Tim Ferriss, definitely. And then the last one, The Honeybee by my mentor, Jake and Gino. My mentors, Jake and Gino. So The Honeybee, that just came out last year, but it absolutely great. It's a story. I think they call it a parable. Teach lessons through a story. Absolute phenomenal book. So congrats to them for putting that together. But those are the ones. So any one of those.
All right.
And Rich Dad Poor Dad.
All right. So what is your superpower?
My superpower is taking action. So sometimes it's whatever the opposite of that is, kryptonite, I guess. And a lot of it has to do with like my ADD, right? So it's like I have to keep moving. I have to be doing something all the time. So taking action, I never have a problem to do. I never have like those moments of hesitation of like, oh man, I hope this, this works out. No, I'm just like, let's do it. We'll figure out this as we go. So I don't really wait around for timing, because it's one thing, and I kind of get that back from my stock market days when I was educating there, is that you can't time the market. You can't really time anything. So if you just sit around and wait, you're gonna miss the boat. So since you can't predict the future, just get in now, get in when you can. So that's one. And then don't wait for. Another thing for me is I don't really wait for 100% perfect plan. A lot of people get this analysis paralysis. I don't really have that. I wait till my plans, say, a percentage of viability. Like, this plan's, I have a high degree of confidence that this plan will work, 80%. And then the rest of the 20% we'll figure out as we go. Because you can't predict everything, right? You can model 100 different scenarios. You can stress test the crap out of it, but you still have no idea how it's going to really happen. So the best thing you do is be extremely conservative. Have high people around you that will call you out if you're being stupid. But then just take action. So get a pretty good plan. Rely on your education, your experience. You have your mentors, your advisors, your partners, all there around you to kind of check in your place, but then take action and figure out the rest as you go. Those are my superpowers. Just do it. Yeah. Just jump off the ship and burn it. Right? There's no going back.
Yeah, excellent advice for our audience. Any requests for our audience?
Yes, Duke, I do have a request, and I want everybody listening to practice this small but very powerful exercise with me. Take a couple minutes. If you're driving, don't do it right now, but I do need you to do this today. So first, I challenge you to picture your ideal life. If money wasn't an option, don't hold anything back, and do not being realistic. Being realistic is the most commonly traveled road to being mediocre, right? Living a mediocre life is people that try to do everything realistic. All right. So when you're doing this, I want you to write down where you're living. What possessions do you own? Who do you spend your time with? What are you spending your time on? Like, are you doing labors of love? Are you doing something you're very passionate about, either charity or whatever that thing is that you're spending your time on, and with whom? Write that down. Write it all down in vivid detail, right? And don't limit yourself by what you think you can achieve now. Because if you do that, you'll never grow and you'll never reach your true potential. A lot of people, like I said before, those limiting beliefs, they set goals by what they think they can achieve now by their current abilities, and not what their true potential is. And they put that ceiling on themselves, and they never grow. They never expand out of their comfort zone to really grow. So once you do that, now I want you to think about the whys. So I want you to write down a why for each one of those things that you listed. I need you to dig deep here. I don't want you to put crap like, I want a fancy car because it looks cool, right? It's not good enough. I need you to have a strong enough why to where failure is not an option, right? If you're not getting emotional when you're writing down these whys, then you're not digging deep enough, or what you're writing down is just crap as far as your goals, right? You need to have a deep emotional driving attachment for each one of these goals, each one of these whys that you have. When you get to that level, now you cannot continue to make excuses for the choices and bad habits that you've been doing up to this point. You have to take action today, because failure is not an option. You said it yourself. You wrote down this thing, I want this, and I attached a why to it, and this why is so strong to achieve this goal. And now, if you've done that, now you don't have any excuses. Now you have to put down, the TV remote. You have to put down the bad food, down all those bad habits, and go take action and make it happen today. All right, so that's the serious part of that exercise. The next part is I need you to go out and research everything on your ideal list, right? So Excel comes in really handy here. So you can go on Excel and start itemizing everything you want, like the house you want, the cars you want, all the belongings you want. If you plan on traveling a lot with your family, go put a budget to that. I want to travel 4 times around the world with my family. It's going to cost X, Y, Z. And when you do this, you're putting out a cost to each one of these items on your ideal life. And then because you're using Excel, it makes it real easy. You can work backwards to figure out, okay, how much money do I need to bring in yearly to achieve this? Either buy this thing or finance this thing if it's a house. You can figure out what your mortgage bill is yearly, and then you work your way back from yearly income to monthly income. And once you figure out your monthly income, that is your freedom number. So that's the number that you're going to put, right over your mirror in your bathroom or wherever, right on the visor of your car, right by your desk at work. You don't have to tell anybody what it is, but that's the number I want you to put down where you can look at it all the time, because that's the number that you need to achieve for your ideal life. And a lot of time, most people are surprised that it's not as high as you thought it was going to be, right? Once you have that number, I want you to look at your current savings rate and investment strategy and evaluate how far apart, and do a gap analysis, how far apart you are from what your current performance is now to where you need to be in order to achieve that number. So how far away you are and how long is it going to take to achieve that goal. All right. And if you're not happy with what you see, you need to take action, right? You already said it yourself. I want to achieve these things, and here's the whys I want to achieve it. I have a family. I need to show them this wonderful life I have for them, or I have kids. I want to pay for college for them. I want to show them the world. I want to travel. I want all these things. I want to be able to afford to give to charities. And you've attached a why to these goals, your ideal life, that you need to take action. So at this point, you need to start educating yourself and start looking at your investment and saving strategies and figuring out what you need to do each day, each month, each quarter, each year to achieve that freedom number that you have, and really take control of your destiny. Because what I found through my journey with my career, the career trajectory that I was on, was it was going to take me 40 years to get to my freedom number. And I achieved it in, almost 6 years through my current, through real estate investing. So, and being an entrepreneur. So definitely take control of your destiny. And another reason I discovered was, if you're not building your own dreams, someone else will hire you to build theirs. And that is so true at any point in our life and our society. So you need to take control of your destiny.
Yeah, great. Super inspirational exercise. I definitely think that helps people to live more intentionally. So as we wrap this up, how can people reach out to you?
So I'm on Facebook, also on LinkedIn. I don't do Instagram often. I think I have an account, but I don't use it. But Facebook, Instagram, or email at connect@tricityequity.com.
All right. And if you're interested in connecting with us, go to tricityequity.com to learn more. To connect with like-minded investors, join our Facebook group, Honolulu Multifamily and more. If you found value in this podcast, please subscribe and give us a rating and review on Apple Podcasts or Stitcher. If you know anyone who might resonate with today's podcast, please share the episode with them. See you next time.
See you, dude.